Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market cipher. So it has been a while since the last video. There hasn't been too much going on with Bitcoin here. The last video was a couple of weeks back when we were around this area here. We can see Bitcoin has come down a bit lower, but we are still pretty much in this range here, just below 20K. But we're going to start by looking at the US stock market. This is the S&P 500 futures chart, and we are coming into a monthly close. There's one more day of trading action here. So we are looking on the monthly chart, and the first thing we can see here is we do have a key order block here on the monthly time frame from this red candle in an uptrend. These order blocks are areas of supply and demand. It's a break in a trend. Time was spent here and therefore volume, and these areas can act as support or resistance levels later on when we retest them. So we can see we are currently in this order block in white, and I think it'll be key to close the monthly at least inside this order block, even better above it. The bottom of the order blocks at 37.10. Currently we're sitting at 37.32. We did come all the way down to 36.18, but we have seen a nice bounce in today's action. These blue order blocks here are all the weekly order blocks. We're just focusing on the monthly for the time being. We do also have a fib retracement here. This is the golden pocket, taking it from this previous consolidation where we did have a pullback to our all-time high here. And even better would be to close inside this golden pocket, which would be at 37.64. We do have a little bit of support on the VPVR here, the amount of volume traded at certain price levels, but most of the volume is higher up here around the 3900 area. So if we do end up getting more of a bounce here, we can look for possible resistance in this area, which would line up with these weekly order blocks. And if we were just to zoom in here on the daily time frame, we still have that monthly order block in white, but we can see this bounce currently on this daily candle. So there is a bit of a battle here as we do close the monthly candle after tomorrow's trading action. Over to Bitcoin now. We're going to look at the monthly for Bitcoin. We can see this is currently our third month around this range between around 18K and 24K approximately. And the first thing we notice is we do have this big spike on the VPVR currently in the area where we're at around 19K. And the amount of volume here is bigger than these previous volume spikes over the entirety of this bull run and bear market. So a lot of volume has traded hands down at this level, and I interpret that as the sell pressure being absorbed here and people thinking this is a decent price to buy Bitcoin. Even if we were to go lower, this will still be a great price to buy Bitcoin in the long term. So it would be quite good if we can close green with this candle. And I've just got marked out the all-time high from the 2017 bull run here. And just zooming in a bit further, this is that all-time high with this white line. And I've also got another white line just marking out the previous lows on these monthly candles. So if we were to close green here, which would be above around $20,050, then we would close above both these lines. We can see we haven't closed below the 2017 all-time high on any of these monthly candles yet. We have had several wicks below. And down to the 2-week time frame now. We did close this 2-week candle at the end of last week. Our close was actually our lowest close in this bear market, down at 18.7K. We do notice also that spike on the VPVR, looking at it on the 2-week time scale. And it's pretty much the most amount of volume has been traded in this area where we're currently at. Now we did also form a 2-week order block here with our last 2-week candle close from this green candle. This may be an area of resistance if we do move back up here. Perhaps we spend some time in this blue box if we are able to close back inside it. The range of this box is 19.6K up to around 21.8K. And just switching to the log scale now, just comparing the previous bottoms here of each bear market and looking at the RSI, we have been watching this key level here from this blue rectangle at around a 46 reading. And we notice when we do break below this level, it indicates one final capitulation. And then we do spend some time at the bottom of the bear market. Breaking back above it indicates the start of the next bull run. Just to show that a bit more clearly here, 2014-15 bear market. We broke below it here on this candle. We had one more final capitulation. We spent a lot of time here at the bottom of the bear market. We broke back above that level on the RSI, again this thin blue box. And once we did close above that level, we started the next bull run. And the same thing with 2018. We saw this blue rectangle act as support several times here as we were getting these dead cat bounces and consolidating sideways. And we had one final capitulation, broke below this area on the RSI, spent a while at the bottom of the bear market. Once we closed back above this level on the RSI, we started the next bull run. And just looking at the two previous bear markets, on this occasion we spent 392 days below that level on the RSI. The second bear market we spent 147 days, so quite different there. And looking at our current bear market, we have currently spent 154 days below that level on the RSI. And we did break it back here on the 25th of April. And the next bull run would really begin once we get back up to this 46 reading on the RSI, which also acted as support similar to the 2018 bear market on these dead cat bounces. And that was during this consolidation area, that one final capitulation when we broke that level. And now I think we're consolidating at the lows like we did during the 2018 and 2014 bear market. So we have currently spent longer below this level on the RSI compared to the 2018-19 bear market. And I think we're going to do a similar thing here to 2015 here at the bottom, where we spent several months here consolidating at the lows. And going down to the weekly time frame now, just looking at that VPVR, we have a higher resolution here, so more of these volume bars, just to show how extreme this spike is at a certain level. And if we were to completely zoom in on that area, we can see where that biggest spike area is between 19,250 and about 19K. So there is a lot of interest at these levels, and it does also line up with these weekly order blocks in red from the end of 2020 as we started the bull run. And if we were to take out this price action, just look at it from the all-time high, we can see that there is still a lot of volume just coming from this price action over the last 3 months, and much more significant amount compared to all of these previous peaks here. So I do think there's a lot of interest in buying Bitcoin at these levels around 20K. We can zoom in a bit further just on this bottoming action here. We see that spike at around 19.1K and another big spike here at around 20.2K. But this whole area between 18.8K and 21.8K, we do see most of the volume in this range. And looking at some weekly order blocks now, these two bottom order blocks are the ones from way back at the end of 2020. And then we do have a couple of order blocks here and one higher up. We did close the previous weekly candle below that order block, wicked into the order block lower down. We did spend time on the daily time frame in between this range. And now we're looking to reclaim this order block again on this weekly candle. And to do that, we need to close the week above 19,380. We are also getting close to this falling wedge pattern here in white. We can see on next week's candle, the top of this falling wedge will be at 20,150. So we are very close to getting some sort of reaction here. Either we break out of this falling wedge or we have another drop back down to stay inside the falling wedge. I think at most we're probably going to just go sideways out of this falling wedge and eventually have another dead cat bounce, possibly to these highs. And something that I think is significant here is we did actually put in some bullish divergence on the weekly time frame. We have the RSI down here. We can see higher lows on the RSI, while making lower lows on the price action when looking at the bodies of the candles. And this is bullish divergence, while we are in this lower range on the RSI, which is below this white dotted line. And these divergences are much more significant in this lower range. And the higher the time frame, the more significant also. I do believe this is the only time we've had weekly bullish divergence where one of the points are below this 30 level on the RSI. And we can't underestimate the significance of a weekly bullish divergence. We also see a drawing that falling wedge pattern on the RSI, similar to the chart with the same points here that we have broken above this falling wedge pattern. We did initially here, but we weren't able to hold it. We did break above it on this occasion. We came back down, didn't quite retest the line, but we have seen a bounce currently. And quite often breaking this pattern on the RSI is an early indication we'll break the same pattern on the chart. So I do think at least we probably go sideways out of this falling wedge pattern. And if the stock market gets a decent bounce, then we might see a dead cat bounce back up to the highs here around 24K. And one thing I want to look at here is the 50-week moving average in yellow and the 100-week moving average in orange. We did see a cross here. We did compare this bottoming action here with possibly the bottoming action at the end of the 2014-15 bear market. And just going back and looking at that, we can see a similar thing where we did have this cross between the 50-week moving average and the 100-week moving average. This did happen around this area here. And I think we're doing a similar thing where we had that final capitulation, a dead cat bounce, which was up to that 25K area with our current bear market. And then we did have a return to the lows and then spend time going sideways. So I think if we're doing a similar thing, we're probably around this area here. And we may just go sideways for a while here. Eventually we had another dead cat bounce up to similar highs as this dead cat bounce. We got resistance on that 50-week moving average. One final capitulation, it got above it, and then we started the next bull run. So if we were to do a similar thing here, perhaps as this 50-week moving average comes down, which it is coming down quite quickly here at the moment, perhaps eventually we come back up and on a dead cat bounce, look for resistance on that 50-week moving average. And perhaps we can show it a bit better here, having both bear markets together. On the top, the 2014-15 bear market, our current bear market on the bottom. And we're looking at this as if this was the peak back in April, and this was an overreactive dead cat bounce. The time frame is the same here between these red lines on both charts. It's actually 100 weeks, which is approximately 2 years. But we can see that it does line up quite well. We did reach an all-time high here, and that's lined up with the red lines. This overactive dead cat bounce here pretty much lines up with this dead cat bounce. And again, we didn't have a blow off top here, which we were expecting. Instead, we went sideways. So if we were to have had that blow off top, this would have looked quite similar. This would have been a dead cat bounce, but not a higher high. And then we did come back down here to this low in a similar area to this low, had another dead cat bounce, similar to this dead cat bounce, came down to another low here, which was the final capitulation, similar to this final capitulation. And then we did have a small dead cat bounce, similar to this one. We've come back down here to the lows of these bodies, similar to our current price action. We also had that cross between the 50-week and the 100-week in a similar area. And now we're looking to break this falling wedge pattern, which is shown on both bear markets. And again, I think we're going to probably go sideways out of this like we did in this bear market, but eventually get that dead cat bounce up to the 50-week moving average. And if we were to line that up, that may be around the end of November here, where we possibly come up to that 50-week moving average. And we'll have to see where that is at the end of November. Perhaps it's at 30K, perhaps it's a bit further down. We'll have to see how that plays out over the coming weeks. And the bull market really started here, where we broke above that 50-week moving average, again 100 weeks after the all-time high. And that would line up 100 weeks from this all-time high around the 13th of March. So we could spend a lot of time going sideways here. And again, this would make sense with our current financial market as it takes time for inflation to cool off. Again, oil is still dropping quite significantly. That's a big part of inflation. I think the next inflation numbers will drop quite a lot more than the previous numbers did. And that would give a bit more confidence in the market that they're getting inflation under control. Interest rates will still go up to the end of the year, but they will be reduced in the amount they go up. and I think they may be put on hold possibly at the end of the year. And this would sort of line up with this time frame of just spending time here in a range. If inflation is under control by the time we get into February, March, we may see the stock market start recovering and also Bitcoin starting its next bull run. The Bitcoin CME futures chart now is also quite similar. We see that big spike on the VPVR here, quite a bit bigger than all these previous spikes. We did also have a bullish divergence on the weekly with lower lows looking at the bodies of the candles, higher lows looking at the RSI. So very similar to the spot price chart. What's different is looking at this falling wedge pattern here on the RSI. We haven't been able to close above it yet. We got resistance here. Sometimes the futures chart can be a bit more accurate with these charting patterns. So I would like to see us close above this falling wedge on the RSI on this weekly candle to give a bit more confidence that we're doing a similar thing on the spot price chart. The daily time frame now, just looking at this consolidation over the past 3 months here, we have several daily order blocks. We do have a daily order block down here, which has been acting as support for the time being. And we haven't closed below this daily order block yet, which is below 18.3K. We did also make a triple bullish divergence on the daily time frame. We can see we made lower lows with this yellow line on the bodies of the candles. We're making higher lows on the RSI. And then we did make lower lows again on the daily candles here with this red line while making higher lows on the RSI. So this is 3 consecutive lower lows on the price action and 3 consecutive higher lows on the RSI. So this is triple bullish divergence on the daily. We saw that initial bounce from that occur here. We got rejected off this daily order block here. We came back down. We had this big wick to the upside up to 20.3K. Got pushed back down to 19.2K. Again, we've wicked into this lower order block and now we're pushing back above again. So it would be good to close the day above this order block, which would be above 19,535. And that will show we have reclaimed this order block. Perhaps we come back and test it for support, close back above it. It gives confidence it's acted as support, and perhaps we can start targeting some of these higher order blocks at 20.2K and 20.4K, which would be in line with this falling wedge pattern, this white line coming down. And on tomorrow's action, that falling wedge is at 20.7K, but we do see it's coming down about $130 a day here. And if we were to stay at this level, we would come into contact with this falling wedge on the 7th of October. And I've just got that bottoming pattern from the 2014-15 bear market overlapped with our current bear market here, just to see what it possibly could look like. We do see it does line up quite well here. We had that dead cat bounce, the pullback to the lower areas, and now looking to possibly just go sideways out of this falling wedge, possibly until the end of October, have that dead cat bounce in November, and then possibly we come back down for one more low before starting the next bull run in March of next year. But I think that's about all. Hope you enjoyed that analysis. Again, we have that weekly bullish divergence and also the triple daily bullish divergence here. So a lot of bullish divergence building up. We have seen a bounce on the stock market today. Hopefully we can get some continuation. And in the immediate short term for Bitcoin here, we want to see today's candle close above this order block, which would be above 19,540. If we do close below it, below 19,420, then this may act as resistance and we may come back down again in this range. It'll be interesting to see the monthly close also come in at the end of tomorrow's trading action. And again, to close above the previous all-time high, we need to close above 19,804. And to close above the previous lows of these monthly candles, we need to close above 19,950. And to close the monthly candle green, we need to close above $20,060. So I think that's about all. Thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.